friend indeed. Oh, she's a gold digger that digs on me.
Good morning, everybody, and welcome to Tuesday, October 14th. It's just coming on 5 a.m. for you guys over there on the East Coast, and, proper prior planning prevents piss-poor performance, which is why we always try and be ahead of something and not try and react to something, like some of the questions I was getting yesterday. Here we are with the S&P futures off of the lows, which was a 50 retracement of the bounce, and just off of the minus 1% where it was a few minutes earlier. The NASDAQ still down minus 1% at the moment, and the Russell 2000 actually holding the best out of everybody, only down 0.76%, although the percentage over on the Dow Jones as well kind of shows, this is still an AI bubble, but who honestly gives a fuck? Because pushing buttons is the way that it works. You got to push buttons. So let's go to recap here. Sunday night, our plus 1% already accomplished on the ES. I'll get a call credit spread set up for you in the morning because it was a complete waste of time talking about buying the dip and playing a bullish put credit spread on Monday because I can chart, but I can't Trump tweet. Trump already tweeted out so that Baron David, his son, could turn around and make $90 million on the, squeeze that he had going on over the weekend. 50 retracement top warnings. And like I showed for you there, the 66.45, 66.40s at $3. However, as you went through on your email, which was, that was your waste of time on Sunday, talking about how we were going to bounce before we went any further to the downside. Sent you out your email there on Monday and started talking about, again, the October candle, but more significantly, talking about your trade for Monday. Your trade for Monday, where at that time I was talking about the risk begins at the monthly candle. Standard Algo bounce rules adhere to a plus 100 points, which is 66.50.78. So therefore, your 66.70, 66.65 calls, you are able to attain $1.50 at the moment at 5 a.m. Not fantastic, not terrible, 98% better than what most traders get who trade SPX credit spreads, but that's what you had. So as we went into the morning, started looking a little bit juicier for me. So 66.45s because you got your 66.32 for your 38.2 retracement, your 66.40s your pivot, 18.11 on the VIX has to hold, which we never actually got down there, and 66.57.68 being your 50 retracement. So it looked great, The wider view is for a second red weekly candle, closing Friday, October 17 weekly, not the AM. Below where we opened today, $3.50 credit is what you're looking for, and everybody was able to obtain that. So, again, the view as it was, and I will go bring you on to actually the chart, which I sent out over there into the spread room. Let me find it over here. And, bring you on to the 1 day, 1 minute. Yep, that's the 1 day, 1 minute, and I don't need to be all the way zoomed down there, but what you had here, get that out of the way. Your 66.40, 66.45, 66.40s. Number one opportunity to take your $3.50 credit and close it down below $2. Your number two was hitting that 66.68, which we talked about there. What time was it in the morning? 66.65, 66.80 in focus, right around 10 o'clock in the morning. 20 moving average, your best resistance expectation, right around 66.65 at the moment. Well, here it is, tagged it perfectly right there at 66.6868. 232, like I said, the next algo takes place at 230. You got your 665.79. And your second opportunity to get that $3.50, $4 credit on the 6645, 6640 call credit spread and take it off at the Epstein files pivot there at 6640.27. Why does 6640 matter? Well, it's been mattering forever. Your bull's final warning being there at 6640. Your bears start winning at 6627, which is where we currently are at the moment. And your 50 retracement from the move to the downside and the bounce to the upside with this retracement that we're talking about being right here around 6609 with 6603 a primary pivot to be concerned about. Obviously, a little sweep on OPEX week down below 6600 to 6599.98 like we had last week wouldn't be out of the ordinary. But as long as we are holding up into that 6600 area, not pressuring too aggressively down onto the 6550s, we should still be due a stall before that confirmed wave 4 move to the downside comes. Over here on your QQQ, you see the same thing. Your bounce right to the 61.8 retracement. Your retracement here overnight, almost to the 50 retracement, almost to the 50 retracement at 593.52 inside of the gap. Once again, unless you start getting that pressure down below 590, earnings aren't coming out for another couple of weeks over there on the big boys. Your 40 points to the downside to match wave 2 is still the same 40 points to the downside to match wave 2. Over here on your VIX, you've had a little bit too much food at the free all-you-can-eat buffet, and it's time to fucking take a rest because you're up here at 2102, above 2102 with your gap up. So you need something a little bit more aggressive than what's been coming out overnight from China to get this thing moving to the upside up into that 24 area. You start rescinding back in below 2102, and you know how the game works, as I've explained and as you've witnessed for many, many months. Dow Jones, and here's your Russell 2000, which I haven't charted it because I don't need to chart it, but as you can see, you've made a much less dent impact into your gap from over the weekend than anyone else. So again, you're sitting on the same boat with the SPX. You got your move, you got your bounce. Now, questionable. Can we get up to 66.83? Questionable. We definitely have everything set up. We've got our A wave. We've got our B wave if we hold today's lows, and then we can get our C wave to the upside. So it's all about how you want to view. You want to view this in short term. You want to view this in wide view. Everything's coming to fruition, and you're going to be having your earnings coming out very shortly. So I will leave you off with the one and last final discussion about this is how I sent the email out to you prior to the opening bell. That obviously looking for that, ABC fits. Go down to Jackson Hole. Completely up to you how you want to play it. Completely up to you whether you want to play it, because you can just sit and wait for it to take place and then go ahead and start buying the dip until we go into the beginning of the new year when the new tax year starts. So I'll leave you off there with Oracle. Like I shared, Oracle replay, shared with you the results of the first time we traded it. Didn't get to alert the very, very first time we traded it because it wasn't fast enough to get it out. But here you are closing at 308 after hitting 310, and you've had a gap down which has come down below 300 overnight. But here you are recovering a little bit because at the end of the day, it's a video game. It will always be a video game, and your futures, I bring you back to them right now, and I will zoom in where you are sitting there with, oh my God, 50 retracement, oh my God. And yeah, all of a sudden, look at that. You can scalp your bounce, and if you are deciding to get aggressive and get long, I hope that you went to your Seventh-day Adventist, Jehovah's Witness, Hebrew, Catholic church over the weekend, because you're going to need everybody's help if you're hoping on this thing to go up.
But, uh-oh.